Hey there, everybody. This is DeFi. We're going to be getting started real soon. I know that Hunter from Offchain is going to be joining. Oh, there he is. Let me get you up here, sir. And we're getting another treat today, which is that Pre-Pop, Umami Labs Chief Technology Officer, is going to be joining as well, and he's pretty much the along with Toki, of course, he's the guy to talk to about the USDC vault. So he's going to have really good alpha on that. So we're very excited. Um, let's get a pulse on how people are feeling. How many of you guys are excited about the USDC vault launched by Umami and upcoming Nitro from Arbitrum? Can we see some hearts and some claps for those who are feeling very bullish on the Arbitrum ecosystem and great things going on in the DeFi space there? This is it. I see gray pixel. Okay, there we go. There we go. It's a little bit better. It's a little bit better. All right. All right. Oh, that's good. Cool. So let's uh, let's give Pre-Pop a couple minutes to join. But in the meantime, I think it would be very appropriate to get an intro from Hunter here from Offchain. Hunter's the community manager for Offchain Labs. I think a very well-loved figure by the entire Arbitrum community. Hunter, do you want to introduce yourself to the group?
LFG, what's going on, dude? Yeah. Thank you, of course, for having me on today. Yeah, as mentioned, I'm the community manager over here at Offchain Labs slash Arbitrum. Never know which one to lead with, Offchain Labs or Arbitrum. Anyways, yeah, do everything from managing, the socials to, pseudo marketing stuff, which now I'm actually gonna probably do a little bit less of, or maybe even more, because we just, are kind of getting more people on the marketing side here finally. And of course, anything that's related to like on-chain, like degen stuff, or just regular on-chain stuff, actually, I should say. Pretty much as crypto native as they come. So really happy to be here in today's spaces representing Arbitrum, as well as representing like really cool projects such as Umami, really innovating in the DeFi space for the better.
Very cool. So I know Prepop just said he's going to be hopping on in just a moment. So I think we should go ahead and get into it. And I know that more folks will be joining soon. So, maybe just to get the ball rolling. I mean, there's a lot we can talk about. Certainly, plenty of things that we can share about Umami. But since we've got you here, Hunter, I'd love just to hear sort of what is keeping you most excited about Arbitrum, both the network itself and also the DeFi ecosystem here.
Ooh, yeah, no, that's a good one. It's honestly a couple things. Like number one being that I'm definitely an Ethereum maxi at heart, in the sense that like I'm personally like a decentralization maxi, in that being that Ethereum to me is most decentralized network for smart smart contracts and whatnot. So to me, building Arbitrum on top of Ethereum is only makes sense, and that's why I love being here, because we're enabling people to use Ethereum through Arbitrum. And likewise, that enables DApps, again, Umami, and a lot of the DApps that were previously on Ethereum to kind of migrate over, and all of a sudden have this intense amount of the usability again, like they did back before
Mm-hmm.
2018. So a ton of things, frankly, but those would probably be the main thing. And obviously, of course, working with the Off-Chain Labs team is honestly just incredible. It really truly feels like I know people look at Arbitrum, like the chain, and maybe us as a company, and like, oh my god, these guys are this huge entity, tons of TVL, and like I'm sure like they got to be like sitting in some corporate office somewhere, making plans about what we're doing next. But frankly, like we're all remote, we're all just like human beings, just kind of talking back and forth about our upcoming plans and our upcoming launches, and also just kind of like like a I guess you could say like oogling and ogling over the really cool dApps that launch on Arbitrum every day. So we're as grassroots as they come, and I think that's what makes working here so fun.
Yeah, no, that's great, and that's interesting. That's a very similar vibe actually to Umami. I think that's sort of just the overall personality of the Arbitrum ecosystem is that sort of very very grassroots, very genuine decentralization maxis, and just a lot of enthusiasm for what we're building. And so Hunter, with that in mind, I'd really love to hear a little bit more about Nitro. Just sort of even just general color and context. I know you can't necessarily commit to a specific date, but I have to imagine there's got to be a lot of buzz and excitement among your dev team, and just kind of curious, sort of what the latest big news is on that front that you can share, and also just any color for sort of just from a user's perspective as to what Arbitrum will be like once Nitro is merged with Arbitrum mainnet.
Yeah, no, totally. So a couple of things here. So I'd say, so generally the way I guess I would kind of outline Arbitrum currently, like from like a chain standpoint, we currently have technically like three instances of I guess you could say, well, okay, so let me just step back here. We have two test nets currently. One of them being the Gurley testnet, which is already running Nitro. We have the Rinkeby testnet, which just upgraded to Nitro actually yesterday. So that was a big milestone actually from our side, especially in the engineering team. So Gurley was launched, like kind of just Nitro right away. As far as I'm familiar with it. Meanwhile, Rinkeby was kind of like the first, I guess you could say, like the first public kind of like testnet where we were able to see, like, especially dApps operating on Rinkeby, they were able to see like, okay, like what kind of changes they had when that chain upgraded to Nitro. It's going to be very similar to what mainnet is going to see, very soon. So it was definitely like a very important update just to kind of, that's why we probably saw a lot of announcements coming out of our main account yesterday and our dev account yesterday as well, because we were really just trying to make sure that everything went smoothly, and of course it did. And generally, so because we have Rinkeby already updated to Nitro, and soon Rinkeby will be deprecated, and Gurley will be the only Nitro testnet standing. Mainnet will be next, essentially. Obviously, as you mentioned, I can't really commit to any dates, unfortunately, but just know that usually the way it works is a lot of you guys know is once the testnet goes, then the mainnet goes. so just making sure everything is stable before we actually go ahead and implement it on mainnet.
Great. Well, we're certainly very excited. And, one thing I was thinking about just from your comments earlier, you mentioned that Arbitrum's been migrating a lot of projects from mainnet. And I think it's also worth noting that, because of Arbitrum's, even prior to the Nitro upgrade, because of its much faster time to finality, much lower gas fees, there are projects that, are built on Arbitrum that are Arbitrum native that really could not have existed on mainnet, right? I mean, GMX is certainly, a prime example of that. So, one thing I'm excited for is just to see, once Nitro goes live, what that's going to mean in terms of, new development activity, as well as just sort of even, smoother and faster UX for existing projects. I mean, is there anything from kind of an ecosystem development perspective that you're especially excited to see, Hunter, once Nitro goes live?
Yeah, totally. So, I mean, a couple of things, right? So, at least from a user perspective, like, you'll see reduced fees, an overall faster experience. And of course, like increased capacity is what I meant to say. So that, it'll take a lot longer, for example, like congestion to start happening if there's a lot of transactions coming through at the same time. Like point in case being, let's say, like the Odyssey, once Nitro does go live, and, we've kind of established everything's looking good, the Odyssey will, commence afterwards. And then I'm sure you'll probably be able to see a big difference in terms of what was going on pre-Nitro and after Nitro, at least, with all the activity the Odyssey is going to bring moving forward. But I think from like a developer and builder perspective, it's really, it's not only what Nitro is going to bring, but it's also just going to be, like just everything surrounding like the Arbitrum tech as a whole. Decentralization is obviously, top of mind for us as well. Obviously, it's the reason why we're building on Ethereum in the first place. If we didn't plan on decentralizing, then, why not just deploy on like another layer one? But yeah, so that's also obviously top of mind. And I think developers truly value, a chain that they can build on where they can rely on people building on it to say like, these guys are true to Ethereum's, core principles. And that includes, community decentralization and all that stuff. So yeah.
Yeah, no, that makes a lot of sense, and I agree. I think that is a really crucial value add for Arbitrum that's still underappreciated, at least sort of outside of kind of the DeFi builder community. But I think that's changing. I mean, one thing that we can speak to from our experience, obviously after we as we were preparing to launch the USDC vault, which I know we'll talk about during this AMA soon, we've been chatting with a lot of institutional investors, and I think outside of DeFi, there really has not been an appreciation for what decentralization means from sort of a practical perspective, particularly with regards to security of on-chain assets in smart contracts. But I think that after a lot of the events just over the past couple months with large sort of CeFi entities, really flaming out, and in part, because of some of the risk factors, the potential fail points of centralization. I think that we're going to see that narrative really start to shift in the coming months with institutional capital, certainly crypto focused hedge funds, but also TradFi appreciating sort of what it means to be able to deploy assets on chain into a permissionless trustless smart contract, right? And as you said, I mean, if it weren't for that, yeah, why not deploy on an Altel One? But also, why not just use a SEX, a centralized exchange, right? So that is a really fundamental value add for the Ethereum ecosystem, and obviously, by proxy, Arbitrum. So I do think that it's going to be really exciting to see that continue to gain traction.
Yeah, no, totally. I definitely agree there. And for what it's worth, I think I'll see if I can pin something here that kind of showcases a little more of our values for people listening who also want to, like, I don't know, scroll through a tweet or something.
Great. So, obviously, we're really happy to have you here, Hunter, and excited to have this chat. This is our first public AMA with our friends at Off Chain Labs, even though we've certainly, been chatting and having a dialogue for quite a few months. So, we have Prepop here, who's our Chief Technology Officer, and really uh, the lead builder in a lot of respects of the USDC Vault as well. So, just kind of want to invite you, Hunter, to ask us any questions that you're curious to learn more about Umami in general, our approach, our current products, and we can just kind of take it from there and eventually open it up to listeners as well.
Dope. Yeah, no, of course. I mean, I guess it probably just makes sense to start off with the vaults, right? I mean, you guys just opened up like that USDC vault. I was just taking a look at it earlier today, and it's like I know you guys sent out two announcements. One having the cap be like 1 million. I think the second one being having the cap be like 2.5 million. And every time I checked, it was already full. Love to hear more about that.
Absolutely. Well, let me hand it off to Prepop. I think no one can speak to it better than him.
Sure. So, yeah, had some great demand on the vault. We launched. The initial 1 million was filled in less than an hour. I'm not sure. I think somebody else has the specific time on that. And we had conditions at the time that were favorable for us to raise the cap with the tracer skew, and so we definitely took advantage of that to get more of the whitelist folks in. And there was a few issues on the initial cap, everybody trying to get in, but I think on the second raise, I think everybody had a smooth time entering on for all our whitelisters, and really couldn't be more happy about how everything went. The deploy, everything went really smoothly, and we're really excited for this thing to kick off and start scaling it up.
Yeah, I think that's a great summary, Prepop. And so yeah, I mean, this I think one of the key points to highlight is that yes, we're capped at 2.5 million TVL right now, and as Prepop mentioned, the fact that both of those cap raises resulted in TVL filling up within in less than an hour in the first case, maybe 90 minutes in the second case. It really speaks to demand, and I think that one of the themes that certainly Umami is building around, but that's going to define the space in general over the coming months is this appetite sort of for two things I would suggest. And one is we have obviously Umami kind of kicked off this hashtag real yield um, term that's gotten a lot of traction in the DeFi space. And the premise there, of course, is that I think a lot of investors, both retail and certainly institutional, have wised up to the fact that just sort of pure inflationary emissions-based APR is not really APR, right? That's farm and dump. Sooner or later, tokens that are emitted in mass, without utility are just not a sustainable source of yield. So, one of the exciting things about the Arbitrum ecosystem, which we talked about a little bit earlier, is you have these native projects like GMX that are doing activities that are really unique and genuinely add value. And as part of that, in GMX's case, it's swaps and its decentralized leveraged perps exchange. They generate an enormous amount of protocol revenue, right? $50 million just since launch, I believe 9 months ago, in protocol revenue. And so, Umami's vaults, both this vault and subsequent vaults that we're launching, tap into those sources of, genuine sort of sustainable yield, what we call real yield, and use that as kind of the engine of returns. And sort of as Hunter mentioned, what's especially exciting kind of for us, but also more broadly, is that, with Nitro launching and with this really rough, drawdown in the market beginning to level off, I think that there's a lot of potential upside in terms of TVL and in terms of transaction throughput on Arbitrum. And as that happens, the beauty of quote unquote real yield is that, that source of revenue will increase. It becomes more robust. It doesn't just run out in the way that emissions do. And so we should see, more upside, both in terms of being able to, continue to scale TVL in our vault, hopefully to 100 million at first, and then more upside beyond that, and to see APR on GMX and our vaults built on top of them continue to improve, right? And I think that by coupling that with another really exciting Arbitrum native project, Tracer, right? These decentralized perpetual pools that allow for completely liquidation proof hedging against ETH and BTC, offering that sort of delta neutralized or delta minimized hedged product, really tailored to kind of risk off institutional capital, with upside from real protocol revenue growth as Arbitrum continues to take off. That's attracted a lot of positive attention, and I think it really just speaks to how robust the Arbitrum ecosystem is broadly.
I'd love to throw my hat in the ring there too. I mean, I think it's so cool that you guys have kind of come up with this idea for a vault again, like utilizing these two different types of leverage protocols. That's what because that's technically what they both are. Obviously, you think too that they'd be like competitors in a way. But I've spoken to both teams, and obviously they work together. So it's really cool to see this synergy between these two teams that you would again think seemingly would be competitors, and then having you guys kind of come in and say, hey, let's kind of all combine together, make this new product. Again, all kind of surrounding this kind of like real yield idea, I guess. And pretty much in a way, like you're like bringing this new type of like DeFi Lego, I think, into crypto that should have been here from the start. And I guess in a way, like in the very beginnings of DeFi, like you could say that like this is kind of how it was, where it's like you got yield and true ETH. But I feel like I don't know, there was some sort of turning point where people just decided, screw it, let's just let's just increase emissions. It's like 1,000%, dilute current holders, allow people to dump it once they receive it, and it's like it just creates that negative feedback loop. Like I wonder, like what gave you guys this idea to go this way versus doing what everyone else is doing?
That's actually a great question. I'm glad you asked it. And to be honest, sort of the irony is that, one of the reasons that we came onto this idea early was that, our origins as a project really was sort of the exact opposite, right? We were initially a fork of Ohm. Now I think we're the only Ohm fork to, have completely broken out of, the sort of negative price trends that we've seen with that group, and that's of course because we pivoted away from that model completely. But we began as an Ohm fork, and so that's, you could say, was kind of the epitome of emissions-based kind of 3-3. That concept, that meme that was so popular among Olympus DAO and other forks. That really just sort of implied that there might be this possibility of creating sustainable value without, as you said, sort of real sources of revenue and some mechanism of returning that back to the community, to stakers, right? And so, that sort of very emission-centric inflationary model, it caught up, with all ohm forks, including Umami. And I think that, certainly for me, I was not project lead during that period, but I've been working closely with the project. It was just really being a part of that made so clear how unsustainable that model was, and sort of that approach really had reached its high watermark kind of in late 2021, early 2022. And that the truth is, right, that, in a certain sense, the same rules that apply in, off-chain, right, in TradFi, if you're assessing a stock or a fixed income investment or anything else, they do apply in DeFi, right? You have to have a value add. You have to have some way of capturing that in the form of protocol revenue, and then you have to have some way of rewarding your long-term holders in your community, with the upside of growth in protocol revenue. And so that was super clear to us after, our experience with the opposite, and we started thinking, okay, so if we're going to start from scratch and ask ourselves, what kind of investment would we really like to see in the DeFi space? Like, even, just for me personally, I think this is true for the rest of the team. Like, what would be most attractive? And of course, the answer would be, give me, some cut of real protocol revenue, and de-risk the volatility, right? I don't want to constantly be, doing technical analysis and trying to make, plays on, where the market's going to go. That's usually not a winning product. And so strip out that exposure to market risk, but, have a focused, concentrated play on real revenue upside from the genuine value adds going on in DeFi. And so that's kind of the base concept that we started with. And, luckily, as you mentioned, there's such a great DeFi ecosystem and so many DeFi blocks to sort of build with on Arbitrum, in this case Tracer and GMX, that we really had the tools to create strategies that expressed that.
I think in the last year we've seen an explosion of growth of the different toolings that enable these, more advanced vault strategies on top. And it's just a really exciting time in DeFi to see this unfold and these new building blocks come out. And we have lots of ideas to use these, and I'm sure a lot of other protocols do too, to really kind of drive innovation forward. And I personally love Arbitrum, not just for how the chain performs. When I first bridged over, I think it was in November of last year, but also, to see how unique and innovative the protocols were that were Arbitrum specific. And it seemed like a lot of the protocols that were pushing innovation had chosen Arbitrum. And for me personally, that's where I had chose to build, explore, and, eventually found Umami and love the value proposition. So yeah, very exciting to see.
Dope. Yeah, no, I mean, I think what would be interesting, at least to hear from my end as well, is so you guys have this vault, like obviously partnered with GMX, Tracer. You're up to 2.5 million in TVL. What is the current plan that you guys have, like going forward to, like, like in terms of like raising the cap for that vault, or just bringing in more TVL and whatnot?
Yeah, I'll share, and then I think Prepop will have a lot to add on this as well. So it's kind of a tiered strategy. One thing that, we as a team realized early on, and it's actually one of the things that excites us most, is that, in order to sort of realize our own ambitions in terms of, scaling TVL and drawing in institutional capital, which is a major focus for us, we had to support the overall growth of the Arbitrum ecosystem, right? We have incredible projects like Tracer, but, the overall TVL in the ecosystem and the amount of liquidity on a lot of projects' platforms is still, relatively low. And so we knew from the outset that, the key was going to be, working, methodically and thoughtfully and carefully to scale, particularly Tracer's perpetual pool TVL in tandem with the TVL of our vaults. And, for those who have followed us closely, they are sort of familiar with the mechanics of Tracer's perpetual pools. We have some material, including some recent posts that you can see in our Twitter that kind of dissect it. But the basic gist is that in order to be able to increase TVL in our own USDC vault, we need to also increase TVL in the tracer pools that we use to hedge out market risk for the vault. And so what we've been doing and are still doing is we've worked with a number of institutional partners, as well as just sort of a lot of organic retail interest to sort of in a stepwise fashion load more TVL into what we would call sort of the long side of the tracer pool, right? So we're hedging, we're taking short positions on ETH and BTC, and the counterparty in those pools is long positions. So we've been loading institutional capital and retail capital into the long positions, which is a very attractive proposition for them as sort of a yield farming opportunity, and simultaneously increasing TVL in our vaults. And so that is what I would call kind of step one in our strategy, and that's just about trying to really generate sustainable long-term interest and understanding of Tracer's really incredible platform. And within probably around a month, we're expecting early September, we're going to kind of execute on the second step of this approach. And what that is that we are now already heads down building our next two vault products. So that's going to be a BTC vault and an ETH vault. And they're very similar to the USDC vault in that, same sort of base source of yield, GMX, same kind of delta management strategy of using tracer pools, but instead of being, delta neutral relative to USDC, they're delta neutral relative to BTC and ETH. So they'll track the performance of BTC and ETH. And because of how their internal mechanics work, they will be effectively serving as counterparties to the USDC vault. And at that point, we can basically scale without restriction those three vaults in tandem, really, we think up to probably around 100 million in TVL, at which point that's when we start to think about, are we diluting GMX? Are we diluting the yield from, the underlying yield source, which is GMX's GLP pool? So once we get there, we'll sort of reassess, around 100 million. And as I said earlier, I mean, the thing that we're most excited about is that particularly once Nitro launches, GMX already has an incredible platform. It's going to be, even, faster time to finality than before with Nitro. It's going to be probably one of the most attractive sort of decentralized leverage perpetual trading products out there. And so we expect to see its TVL and usage increase really dramatically, which should allow us to just keep on scaling those vaults. So that's the overall vision, and Prepop can share some thoughts as well.
Yeah, I think that's a good overall explanation. I think with the natural scaling that we're going to be taking, there's going to be organic growth. Definitely, anytime there is a leverage advantage, like one that shows up on Tracer's pools, it's going to be filled. And so with that natural organic growth coupled with our plans of the Bitcoin and ETH vaults to really productize that skew imbalance on both sides, and allow that as the TVL fills up on both sides, we'll be trending to one, which is ideal for all the vaults. So yeah, I think it's a really fascinating product, and it's going to work really well with these three vaults.
Awesome. Yeah, no, I think it'd be very interesting as well to maybe hear a little more about like if you can, of course, like your decision process in terms of like who to partner with for some of these vaults, as well as just generally. I mean, like, are vaults the only thing that maybe you guys are kind of sticking to currently for like these types of partnerships, or are you guys exploring any other options?
Yeah, that's a great question. I'll share some high level thoughts on that. There's a lot of moving parts that go into that decision making process for us. I'll tell you the first there are a few overwhelmingly important considerations that we take into account before um, moving really, even beginning to think about a partnership or a vault strategy, which is, first of all, obviously, the real yield premise. So, we only would look at building a vault strategy, on top of a partner project that is returning real protocol revenue. Obviously, if there's also some emissions, GMX does have some ESGMX rewards. That's fine, but it has to be our basic calculus is that has to be an a source of upside, but never the foundation of a strategy. The strategy has to stand alone on the basis of sustainable protocol revenue that is being, somehow tapped into vis-a-vis the vault strategy. And so that's, consideration number one. Consideration number two is TVL, and this is a really important point. Certainly, I think something that still is kind of underappreciated in DeFi, but for us, it's crucial. Basically, the long-term vision for Umami is that we're creating sort of a regulatory compliant framework for producing DeFi products that are really tailored to the preferences of institutional capital, right? So we've done a lot of informational interviews with hedge funds, with pension funds, and with other sort of TradFi partners to get a sense of what kind of DeFi products they want, what their pain points are, and what they would need to be comfortable making a considerable asset allocation into, say, Arbitrum. And we've tailored the types of products we offer around that. But none of it is really worth anything if we can't absorb the amount of TVL that is needle moving for institutional capital, right? So 100 million as sort of a max would be the absolute lower bound for what we would consider as the basis of a vault strategy that we build. So the second big consideration is, what is the size of this liquidity pool? How much TVL could we pump into it before we start to dilute yield? And that's a major consideration. And then, if we're talking about kind of specific partners, obviously we want to work with good projects that are very professional teams and are building something sustainable that adds value. That's very important to us. I would say, just to use as an example here, of a very close partner of ours at this point is TracerDAO, which is, their sort of parent sort of off-chain entity is Mycelium. And, for I'm using them as an example because I would say, a really ideal partner would be one that shares our basic ethos and orientation. And what I mean there is that, we're at this point, pretty much our entire team is doxed or will be doxing soon. We've, have a chief legal officer who's really an expert, in securities law and in tax law and in sort of creating, legal entities. And so we have this, ambition to, be leaders in creating regulatory compliant legal structures that allow institutional capital to, onboard to DeFi, and we want to really actively, court that market and produce, as I mentioned earlier, products that are highly appealing to them, that kind of meet them where they're at in terms of risk profile and overall product structure. So Tracer is just an example of their very similar approach. Doc's team, off-chain legal entity, real focus on compliance. And actively working with some pretty cool institutions on their end. So projects like that we really love because we can team up and we can basically kind of build what we think is going to be the next epoch in DeFi, which is not going to necessarily be degen and just kind of yield farming retail capital jumping from chain to chain. There'll always be that element, but the real sort of sustainable model for DeFi long term will absolutely be institutional capital that appreciates the value that decentralized, trustless, permissionless smart contracts bring, and want exposure to that. So that's kind of our final consideration. Prepop, do you want to share anything?
Yeah, that was a good explanation. some of our core values. And there's also, the technical considerations of the building blocks as things begin to standardize. I think every time there's a big ERC standardization, there's a large wave of innovation that can come right after. And so, the ERC 4626, for all the different tokenized vaults being standardized, that's really going to bring some openness. But in general, just when evaluating partnerships, obviously it has to be a technical consideration of how everything that in the strategy needs to be achieved can be achieved through our smart contracting interacting with their smart contracts interface, and then additionally any information we might need outside of off chain in terms of, is there oracles to account for necessary prices that we might need? Are there any other calculation that needs to be done? And so that's definitely a big part of this partnership and strategizing is when it gets to that technical aspect. Once it checks all the boxes in terms of this meets our strategy, our protocol objectives, and our goals, and then we really have to dig into the feasibility of making this a decentralized product.
Yeah, no, that's a really important point, Prepop. And Hunter, I might suggest that since we're a little bit over the half-hour mark already, and I see, quite a bit of interest from our listeners in asking some questions, should we pivot over to questions from the audience?
LFG, let's do it.
Do it. So we've got a fellow here, St. Patrick's. They've been waiting for a while, so let's see what they got to say. Hey, St. Patrick's. Are you able to speak and share your question? Well, we can try that again later. But there's another question from in our AMA questions in chat, which you might not be able to see, Hunter, but it's a channel in our Discord. From community member a Firebrand, who has been a real friend of the protocol for a long time, has a question actually for off-chain. So I'll read that to you, Hunter, and you can share your thoughts. The question is, the successful migration of Nitro on Rinkeby was immensely exciting. The recent Nitro update noted that mainnet was quote-unquote weeks away after the final testnet integration. Does this timeline still stand, i.e. Nitro by the end of August? Can you please confirm that the network will not be throttled after Nitro launch? Those are really good questions, so I'd love to hear your thoughts.
Yeah, totally. So, I mean, yeah, so like when we say weeks away, like definitely weeks away. I mean, again, like, I know it's like, okay, how many weeks? Again, I can't get into how many weeks, unfortunately, but it is weeks away. Again, like I said, kind of previously, the usually once you have like a testnet, obviously upgrade mainnet is like right after. So definitely is relatively close. In terms of like throttling and whatnot, like I can't say that the network will be like completely fully open to in terms of no throttling. And again, I'm a community manager, so take this with a grain of salt. But while there will be like obviously increased capacity, cheaper fees, and just transactions being even faster, there still will be like a degree of throttling, to my understanding. And by that I mean currently, as Arbitrum Classic stands, there's a certain amount of, I guess, transactions per second that you can hit before the network starts congesting, just like any other blockchain, essentially, right? With Nitro, that capacity is going to increase, so you'll be able to have a lot more transactions per second kind of coming through, while sustaining relatively cheap fees. So to the degree that you're asking will the network be throttled in any way? I think it still will be, but it'll be a lot less than it currently is now, from my understanding. But I think there's probably more details in some of our Medium articles that we've released as well.
Great, that's That's fantastic. And then there's another question here from a community member for Umami, which is, can you speak on the insurance plans for the USDC Vault and its timeline? What would be the plan after the USDC Vault? So insurance, so that's really important, and I'm glad someone asked about that. So just to zoom out a little bit, remember Umami is kind of, we've mentioned that Umami is really focused, on institutional capital, but also just sort of on this, general notion of really professionalizing the overall quality of, DeFi product development, and, the particularly with respect to, questions of, security and transparency. So, we're not only audited, we've also worked with Balance, which is an AI-driven wealth management platform, to model our vault performance very carefully and back test it over many days of past data during volatile markets to make sure it will in fact perform as hoped. And that's all, that information is public in our docs, which you can find on our app. And so insurance, of course, is another really important part of that. And we are working actually with two different DeFi insurance providers. One is InsureAce, and the other is Risk Harbor. And they're actually quite different. Risk Harbor is permissionless, and as soon as they will be making some amount of insurance available on our vault very soon. I know that internally, they've gotten approval for that. They're generating their own insurance vault on Arbitrum, and the TVL will be allocated in part to Umami, as well as some other great Arbitrum-based projects. So that should be available. I would say first half of August would be our expectation, although I can't speak for Risk Harbor directly. InsureAce is a little bit more of a formal, similar to a traditional insurance provider. They do their own underwriting process. They enter into a contract with us at the end of that. They initiate underwriting, after the audit's completed, which we've finalized, providing them with all the information they need to kick that process off. So I would expect, about 4 weeks for an underwriting process, and then after that we will have additional insurance from them. And the basic structure that we're planning to adopt is that Risk Harbor being permissionless, and also actually likely to be able to provide more overall underwriting capacity, that will be available to all vault depositors, right? So that'll be sort of the easy option for retail. We're also working with a number of crypto hedge funds and other family offices and other institutional capital for deposits at scale into our USDC vault, and we're likely to keep InsureAce as kind of a gated offering for them, which of course benefits our community because it's highly desirable to get as much TVL into the vault as possible. So that's our summary of insurance. Prepop, do you want to add anything?
I think that was it. Yeah, that was a good rundown and overview of where we're going to be adding. The Risk Harbor is particularly intriguing to me because I love the thought of the permissionless insurance pools. And so, yeah, I definitely encourage anybody that's interested in insurance to take a look at Risk Harbor right now as they're getting everything set up, and see how the protocol works, because it's a great protocol for the DeFi space as a whole. So Risk Harbor.
Great. So with that, let's open it up. Does anyone else who's listening want to ask questions, either to Prepop and myself, or to Hunter? So anything Umami or Arbitrum related generally. I'll give you guys a couple minutes. And remember, we in our most recent tweet, you will see a link to our Discord, specifically to our AMA questions channel. So people who can't raise their hand in the spaces are welcome just to write something up there, and we'll answer it that way. Give it a couple minutes.
See a couple PFPs in the chat, some small brains, some blueberries.
Oh yeah. Yeah, we always see some blueberries. It's definitely a lot of overlap in those communities. Maybe while we wait, I mean, Hunter, any other, anything else that you want to share about Arbitrum, or anything else you want to ask us about Umami?
I'd probably say, I mean, for what it's worth, like, I know, like right now, like a lot more than before, there are a lot more eyes on like the layer two ecosystem, in terms of like, not only Arbitrum, but the Optimisms of the world, the ZK teams of the world. And I think just more and more eyes are going to be coming towards like layer two Ethereum generally. Like there's still people out there who think like layer one is the way to go. Like, I mean, like making their own layer ones. And, I think you'll always have that, unfortunately. But I think more and more as time goes on, it's like technology just becomes more and more proven. And like, frankly, I feel like it's where all the kind of like even like a lot of big Web 2 partnerships are kind of happening as well. Um, it's just like a no brainer for me, just for any like DApp to just live on like, whether it be like a layer two or obviously Arbitrum itself. I feel like it just makes more sense. I don't know. I mean, is there any argument at this point to not build on a layer two? I mean, does anyone have anything? I don't know.
I mean, we share your bias, right? So you're preaching to the choir with that one. But yeah, no, I agree. I mean, I think that on sort of a very basic level, right? That this, if you look at sort of the trajectory of development in sort of any subset of the technology sector, whether on chain or off chain, network effects have been the deciding factor, right? And if you're talking about kind of decentralization as a core value out of blockchain, which of course it is, network effects are all the more important. And there's really, to your point, no reason why through kind of the right mix of mainnet as a settlement layer that's going to be sort of even more effective and faster time to finality and lower gas fees from the beacon merge, plus a network of different L2s, an ecosystem of different L2s that kind of can handle, we'll probably see specialization, right, in sort of different subsets of the blockchain ecosystem broadly, among L2s. I think Arbitrum is going to remain a leader in DeFi. That really has the capacity to probably, onboard, the vast majority of TVL and usage associated with mass adoption of crypto. And then it doesn't mean that there won't continue to be a role for L1s, but I think that, the Ethereum ecosystem is already won from a network perspective, from a network effect perspective. And that's a very hard, it's hard to lose that once it's been so firmly established. I see St. Patrick's. I'll give them another chance. St. Patrick's, do you want to try to ask your question this time? Let us know. Are you able to speak?
Yeah, good day.
Great.
Great. I was like thinking, I want to ask this question. This platform, that's the Umami, for me as ordinary non-tech person, how can I participate in that? Um, okay, I've been hearing so many things about ZK roll-ups and all this stuff. I was just wondering if you guys can explain it to me more simply. Like, I am not that tech savvy. And okay, if I want to explain it to somebody that maybe they wants to stake money into the pool or something, what the kind of explanation I'm supposed to give to the person, and what the person is supposed to be getting say staker or something like that.
Sure. All right. Great. Yeah. Thank you so much. We'll answer that question. I appreciate you asking it. So basically, well, I'll answer the Umami side, and I think Hunter can give kind of a brief summary of the value of sort of scaling chains, specifically, roll-ups, including optimistic roll-ups, which is what Arbitrum is. With respect to Umami, absolutely, retail investors are sort of more than welcome to participate in our product offerings. I think one of the things that's most beautiful and exciting about DeFi in a lot of ways is that, because our products are indeed sort of trustless and permissionless, even though, yeah, we're building these vaults with, institutional capital as our target market, they will be fully open to retail, and that's by design, right? We believe that retail investors should have all the same options as institutions, and there shouldn't necessarily be sort of, if you will, an old boys network of institutional capital that gets access to alpha or investment opportunities that everyday people can't. So right now, for the reasons that we said earlier, because we are in the process of scaling TVL in the vault, so we're gradually increasing our capacity to absorb deposits. We are accepting deposits on a whitelisted basis, so only longstanding members of our community and some core institutional partners are able to deposit right now. But that's only going to be the case for 4 to 6 more weeks. So we do very much more than expect. We will open up our vault to everyone, and everyday investors can benefit. So that's our answer. And Hunter, if you want to elaborate at all on roll-ups, you're welcome to do so.
Yeah, totally. I think at least speaking from like our perspective, like with where Arbitrum 1 is at today, and where it'll be in the future, it's mainly I mean it's like it's scaling at like multiple different levels. It's scaling from like a marketing perspective, scaling from like an adoption perspective in terms of just getting more builders to come on to layer 2, which we're currently doing a lot of right now, as well as just making it more accessible to people all around the world everywhere. Currently, if you live essentially anywhere around the world and you have some sort of centralized exchange, whether it be Binance, FTX, Mobi, etc., you can onboard to Arbitrum directly. They all have deposits and withdrawals, go flowing into Arbitrum currently. Funny enough, the only country, as far as I'm concerned, that doesn't have it right now is the U.S. so we've actually hit everywhere else besides the U.S. currently. But obviously we're still working those relationships out as well to get those going. And just like hitting everything on every front. Funny enough, like Arbitrum was literally like it's Off-Chain Labs, I should say, was about like 12 or 13 people when I joined last year, before we launched Arbitrum 1. Today we're sitting at roughly like 40 something people, which frankly, even to me, feels like a lot at this point. And most of the people on our team are engineers. A little bit maybe less are like partnerships, and we're just starting to scale out our marketing team now. So it's pretty crazy how we've kind of from day one we've been all about the product first, making sure that what we're building is the best essentially. And we're at the point where not only can we do that, but we can also make sure that, hey, like we're also able to market it to the correct people as well, which frankly is everyone who wants to get into crypto, Web3, or who people who don't even know that they need to get into it, kind of get them involved as well. So we're definitely trying to scale on all fronts, and Umami is really helping us do that. In every way that they succeed, we do too. So yeah.
Awesome. No, that's a great answer. No, go ahead.
In a more literal sense, it would be helpful if people could post some guides on how to get started, both bridging to Arbitrum and how to get started.
I think you're cutting in and out.
Yeah, you're cutting out a little bit pre-pop, but I agree that there definitely should be educational materials for people just to help them get started in DeFi. Let's take this question from OXD24.
Yeah, thanks, guys. Exciting to see the vault launch the other day. Just a question with regards to TradFi, I guess, institutions. Like, one, have you noticed that they like actually like have an appetite for DeFi being on chain and understand kind of the difference of that versus like the Celsiuses and the centralized DeFi or centralized finance stuff? I guess, and then two, I guess, after the whole 3AC Celsius stuff, are you seeing higher demand from those institutions to like have true on-chain sort of asset management products, or like what have those conversations been like? Because I just guess not really understanding how much they actually understand the space.
That's a great question, and I would love to say, right, that sort of your average mom and pop family office, or a pension fund or whatnot has that sort of deep appreciation of the distinction between sort of a true DeFi smart contract versus a Celsius or a 3AC. And no, right now, they don't. But I can break this down, a little bit more. Um, it it's a question of market segmentation. So, we right now, a lot of the TVL from institutions, that's lined up presently to deposit into our vaults. A lot of our existing core institutional partners, they are either outright crypto hedge funds, right, that have been operating on chain for a while, or they're at least a group of traditional hedge funds and family offices that have made that pivot and hired people who have knowledge of DeFi and have been allocating assets on chain. And that, to be clear, that is a significant market unto itself. There's billions of dollars of TVL from that group of what you could call sort of early adopters in the TradFi space. They definitely appreciate that distinction. They immediately, in many cases, those would not have been the sorts of funds that were invested in Celsius in the first place because they were already on chain. So in terms of kind of capturing the early adopters who were sort of most inclined to allocate assets into DeFi, the value out of having trustless, permissionless smart contracts on a network like Arbitrum is certainly not lost. And then when we talk about sort of the somewhat, if you kind of look at the adoption curve, the vast majority of funds that are not necessarily at that point, they know that they want to have an allocation to crypto, and they have some maybe some concept of what it would mean to be on DeFi, investing in DeFi as opposed to through a centralized exchange. With them, we don't necessarily think that level of familiarity is there, but there's a really important link in that chain, which is that there are a lot of those funds, their decisions, their investment allocation decisions are mediated by really well established CeFi entities that have sort of been marketing to them and establishing partnerships and guiding them, and those entities do understand the distinction, and they do want to have on-chain product offerings as part of their portfolio. They're driven, in part by yield as a motive, the fact that you can get higher yields in DeFi. They do understand the security aspect, and it's also just kind of a marketing and sort of positioning play from them. They want to be seen, they want to be actively connected to the DeFi space because they know that there's a lot of growth potential there. And those guys, we've had really exciting partnership discussions with, institutions like that can play that role of, actively distributing to, family offices, pension funds, trusts, etc., and abstracting away a lot of the complexity of on-ramping fiat to crypto and possibly bridging to Arbitrum, etc. So I think the key point then is that no, most people don't understand that, but the key actors that really can drive TVL now do. And I think that after Celsius 3AC, these kinds of recent blowups were very high profile, and so this narrative that a permissionless, trustless smart contract on a decentralized chain, like the Ethereum ecosystem, Arbitrum, is an antidote to that. I think that will get lots of traction, in part because we have some influential voices that are sort of advocating for the type of product we've designed. Any other questions, D24?
No, super helpful. Appreciate the color. Thanks for the detail.
Absolutely. Great. Well, let's do one last call. We have about 3 minutes left. Any final questions from the audience? Anyone want to drop anything into our Discord AMA questions or just ask here on the spaces? All right. Hunter, do you want to share any last thoughts? This was a great chat.
Totally, yeah. If there's anyone obviously in the audience that wants to get involved in the Arbitrum ecosystem, obviously feel free to join our Discords, whether it's ours as well as the Umami Discord. If you're looking to like kind of help scale Ethereum, and you want to work over here, we're obviously hiring as well. And generally, I mean, if you're even building a protocol too, and you're not sure if you want it to be on Arbitrum, or if you are sure you want it to be on Arbitrum, feel free to send me a DM, and happy to connect you with our partnerships team to get the conversation going here. We're all about building relationships, so yeah.
Yeah, that's great. And the last little plug that I'll offer, this goes back to what we were talking about earlier. One of the big goals that we have with this Vault launch is to support the Arbitrum ecosystem by helping our partner TracerDAO scale liquidity in some of their perpetual pools, which in turn helps our Vault increase its TVL capacity. And right now, over the next several weeks, there's going to be a really compelling opportunity, both for retail and institutions, to do some yield farming on Tracer's perpetual pools. We have guides to that. We recently, just this morning, on this Twitter account, tweeted, our primary blog post that offers a guide to that for people to review. We're really happy to answer any questions. I know Tracer team is as well. But we strongly encourage it. It supports the ecosystem. It will support Umami and allow us to scale the vault more. And it's just a smart yield farming play. So feel free to hop into our Discord. Ping myself, Mr. Grumpy Pants, Wen Moon, our treasury manager. We'll answer your questions, and check out the blog post on our Twitter. And with that, Prepop, are you able to get reception? Do you have any final thoughts? Okay.
Is Prepop in the middle of the forest? Like, what's going on there?
Yeah, I don't know. It's always, Twitter Spaces are always funny because they force you to use your phone, right?
Yeah.
And then if your phone reception cuts out, it's an issue. But all right.
True.
Anyways, thank you so much, Hunter. It was really awesome having you here. Great chat, great audience. Thanks for all the questions, and we will update everyone next week at our next community AMA.
Likewise. Thanks for having me on, guys. Appreciate y'all.
Bye.